Mortgage rates just dropped to their lowest point since last October, and that's huge. But before we start celebrating, here's the truth. Yes, lower rates are definitely boosting consumer optimism. Purchase applications are up, refinance applications are up. But it's important to know that these rates are still steep compared to where they were just a couple of years ago. Housing affordability is still a huge challenge with rising home prices and insurance costs. And while the market is betting on the Fed cutting rates over the next couple months, which could further help interest rates, there's still a lot to go. No, this isn't the finish line, but it is progress. That and more coming up in September's Atlanta housing market update. Let's dive right in. So we're going to cover a lot of information in today's video, but we're not going to be able to get to everything. So in the report that I put together this month, I have a lot of extra slides that I just won't have time to talk about in today's video. If you want to grab that report, it's free. The link is in the description and in that first comment. So interest rates are trending down, right? And that's a good thing. I mean, you hear it everywhere, whether you watch the news on TV or read some article online on your phone, wherever it might be. There's messaging everywhere about interest rates being the lowest that they've been in almost a year. And that's good. Like, interest rates were higher to start the year. This time last year, though, they were less. We're now at 6.5% on average. This time last year, we were at 6.35%. This time last year, the market was expecting the Fed to cut rates, and the Fed ended up cutting rates for the first time, I think, in 4 years. When you saw rates trend from 6.35 all the way down to almost 6%. Then the election happened and rates shot back up to just a little bit over 7 to start the year. And they've been ebb and flowing all the way down to 6.5 right now. But the reason why everybody is so focused on interest rates is because that's the most probable lever to help affordability. There are 3 factors that come into being able to afford a home. One is how much money you make. Companies aren't going to magically start paying people double. So interest rates, obviously, the higher the rates are, the harder it is to afford a house, the less house you can afford for that same payment. And then the last component is housing prices. And housing prices over the last couple of years have dramatically shot up. They're up a lot in our market. They're up all over the country. Now you're starting to see some pullback in certain parts of Atlanta, and we're definitely going to cover that in this video. But as a whole, interest rates are the more likely of the 3 levers to help with affordability. So everybody's watching where rates are going. So the Fed wants to see inflation at 2%. And we've been a little bit higher over the last couple of months, but it's been very, very close to 2, even with everything that's been happening in the economy with tariffs and so forth. So now this past month and a half, the last time that Jerome Powell spoke in Jackson Hole, he said they were now open to the idea of cutting rates. Now, there's something that just happened this past month. In a healthy market, the market was expecting roughly 75,000 new jobs to be created in the month of August. Well, those numbers fell extremely short. Instead of 75,000, they came in at roughly 22,000. So the market believes that the Fed has no choice. Come September 17th, they're going to have to drop rates. The question is by how much? Now, this past month, a viewer of ours turned me on to a tool that I think is really cool. So Anthony, if you're watching this, I appreciate the heads up about this. So the CME group has a tool that they call the Fed Watch. And what this is basically when you look at this table, you can see all these different dates are the next meetings, and it shows what the probability of rate cuts are going to be. Now we're at a 4.25% rate, call it 425. And there's an 88.1% chance. This is what the market believes is the most likely outcome. Basically, a 25 basis point reduction in rates. The market believes that there's an 11.9% chance that the Fed will cut rates by a 50 basis point measure. So from 4.25 all the way down to 3.75. Now, the Fed cutting rates to 3.75, that doesn't necessarily mean that that's what mortgage rates would be. Wouldn't it be awesome if those were mortgage rates? But that's not what that means. The Fed fund rate is the rate at which banks loan themselves money, basically. So eventually the mortgage market catches up. It's a lead indicator for what might happen down the road, but a lot is also dependent on what happens with the stock market, with the job market, the 10-year treasury, which follows that job market. And the treasury yield has been at a 5-month low, which is why we've been seeing rates kind of come down over the last couple of weeks here basically, and it's tied into the job markets report. All of that's all connected basically. So let me show you the 10-year treasury. So you can see back in 2020 when rates were astronomically low, they were practically zero. It felt like a lot of people got mortgages at 2.5, 2.25, all the way up to 3%. Well, look at what happened when rates rose, and then they peaked in that November, October timeframe. Mortgage rates peaked at 8.03. Well, so did the treasury. Then it's been up and down over the last couple of years. Now, over the last couple of months and weeks, it's been trending down. As of right now, the recording of this video, we're at 4.08%. So this is a downward trend in the 10-year treasury. If this continues coming down this way, it is realistic to expect that you could see mortgage rates come down towards like 6.375, potentially a little bit lower on average. But here's a chart that shows exactly where rates have been for the 30-year conventional compared to the 15-year conventional. 15-year, if you're able to swing those numbers, gets you a rate that's almost a full percent under what the 30-year rate is. So they've been trending down, and we'll continue to see where they trend over the next couple of months. Now, this next chart is the wage growth versus home values. And the home values on this chart, it's the average sales price growth here in Atlanta. So this is not national, it's right here at home. So when you take a look at that versus Georgia wages, we've got a problem. Over the last couple of years, this red area here, this is a gap. And it's a gap where home prices have far exceeded wage growth. So from year to year, you make a little bit more in your job, but home prices continue to appreciate at a percentage that's far above what your percentage increases in your pay. Eventually, home prices run away and you can't keep up. It becomes unattainable, right? Out of arm's reach, basically. So for instance, in 2022, at the beginning of the year, wages increased by an average of 6.7%, but home values in that same time increased by 16.7%. So it's 10% more. So if that gap continues for a long period of time, it becomes so unsustainable that only a small percentage of people are able to afford a home. Now, what we're seeing here is you're seeing wage growth kind of cool a little bit, but you're also seeing home values come down. And look at that. We're now in this portion here where wages are exceeding the growth in values. So I'm going to show you this as we move into all of these slides today, but home values are kind of stagnating in Atlanta. There are parts of Atlanta where values are still going up, and there are parts of Atlanta where home prices are starting to come down. So it's allowing wage growth to finally catch up a little bit, but it's so incrementally small and slow that it would take a very long period of time for this lever on that affordability factor to make homeownership affordable again. Now, this is where we are in terms of values. So the yellow line is the average price, and the average price in Atlanta trended up this past month a little bit from 530, 878 all the way up to 531, 530. So this has been on a little bit more of a regular incline over the years, whereas median, I say it every month. I feel like every month I come on to video here and I say that the median sales price for Atlanta is still 425. And you're going to see something different in the media. But you take a look, this is basically July. This is September. So since September of last year, the median price has not moved. It's been 425, and it's been 425 for the greater Atlanta area. Those are the 11 counties that make up the greater Atlanta area. That's, in my opinion, representative of our metro. Now, in this video, I'm adding a couple of extra counties, but a lot of these calculations are still based on that 11 county metric. But this month, I'm also adding information about Hall. I've seen the comments. I know that some people are interested in Henry County, so I've got Henry in here as well. And there's also some Bartow. So we're going a little bit further out. I think what I might do based on some feedback is start to create separate market update videos, one specifically for inside of Atlanta, and then I might separate it and do one for like North Atlanta, South Atlanta. We'll figure it out, but we're going to split this up a little bit so I can get more specific and less generic or general based. So yeah, let me know in the comments if that's something you'd like to see me do, because I'm happy to put the time to research it if enough people will watch those specific videos. So moving on, let's take a look at inventory. So this is where we are with new listings coming to market, and it's normal that it's going to start trending down at this time of the year. School started, right? So there's a cyclical nature. You can see it in every other year until spring market. You're going to have less and less properties coming to market. Now, for a while, when we started the year, when I first started doing these videos a couple months ago, we were way above what those other trend lines were. and then we started to dip below. So there's less inventory coming to market now. We're actually behind 2022 and 2024. Only 2023 had less new listings coming to market, but we're still really high when it comes to active inventory. Let me show you that right now. So for active inventory, you can see how far we are above last year. This blue line here is last year. So this was trending up. This here, you can start to see it trend down. We peaked at almost 22,000 active listings in the 11 counties. If I start adding all of the counties, the Halls, the Bartows, all of them, it's going to be more. But in that greater Atlanta 11 county region designated by FMLS, we peaked at almost 22,000 listings. Now we're closer to 21,000. So some of those are people who've tried the market, and we're going to look at failures here. They've failed to sell. Now they're off the market. Some went under contract, some closed. And there's also less coming to market. So inventory levels are starting to taper off just a little bit. So pendings, this is the big one. When you take a look at this, look at how far below we are compared to previous years. So I think that's kind of interesting, especially if you're a buyer, because if you're a seller, there are less homes selling. I think it's a little bit more interesting when somebody comes to knock on your door with an offer. Now you're going to pay a little bit more attention, because what happens if you don't might be a while before you sell your house. I'm going to show you that here in a moment with trending inventory and days on market. So pendings are down, and then here are sales, and then here are sales. So sales also. It's not a surprise that if pendings are down, sales are also going to be down. But you can see here, 2023 and 24 were kind of intertwined. We've been below everything quite handedly this year. And this is a big gap. Like, that's a pretty big gap compared to where we were last year and then the year before, and then back in 2022, of course. So now I mentioned failed listings. Let's take a look at that, because they are skyrocketing. Okay, so this is where we are now. See how that compares to this time last year. So we're going to get very granular with this in just a couple of minutes, but just looking at the actual unit numbers, that's a huge increase over last year. And it's an even bigger increase over the two previous years before. That's a wide gap. And when you look at how this is actually trending, I mean, that's a slope that is looking like it's doing this. So this is really going to be interesting to see over the next couple of months, basically. Now, this upward swing at the end of the year is normal, because a lot of listings put the last day of December as the date to finish the listing. So when you get to that point and it expires, there's always a huge amount of properties that are expiring on the last day of the year. And then a whole bunch of agents are calling people on the 2nd of January, some on the 1st of January, asking to relist those properties. So if that's you, know that that's going to happen if you have a date that's going to expire on the 31st of December. And then if we take a look at how that breaks down a little bit more closely, this is over the last 12 months for Greater Atlanta. And the yellow is the combined of expires and withdrawns. But I wanted to show you the difference, because you see here at the end of the year, I mentioned that there's always an uptick. So you can see that right here, right? And this is kind of where we are right now. So expireds have been trending up. Withdrawns, there's a lot of reasons why a property might be withdrawn. It could be a situation where the seller is just fed up and they want to pull their house off the market. They're tired of not selling. The other one is maybe it's been on the market a little bit too long and they want to pull it off and put it back on with either fresh pictures, a new price. They want to make it look like a new listing. They withdraw it and they put it right back on the market. It doesn't usually affect days on market, but if you keep it off the market for a little bit longer and you put it back on, it starts to counter fresh. So it's a way of making it look like you haven't been for sale for very long, until an agent clicks on history, or you go to one of the portals and you look at history and you can see that they've been trying to sell this property since 2022. So, I mean, there are a lot of properties like that right now. Now, this next chart is one that we've talked about in previous videos, and I've got two versions of this. So this one is not this month's chart, it's last month's, but I wanted to show it to you because you're going to see how it shifts. So take a look at this. This was last month. And what is this? This is the difference in the number of active listings versus closed listings. And if you go all the way back to 2021, actually a couple of videos ago, this was a 1-to-1 ratio. So for every active listing that was in the market, one closed. This last month, this ratio was 5.6 to 1. If you go back to last month's video or the one before that, it was a 5 to 1 ratio. So as this line trends upwards like this, and you start to see the closings dip down, and what did we just look at? Well, let's go back a couple slides. Look at closings. Look at how this is trending down. See, this is like a downward slope, right? Well, this is this month. So you see how that morphs a little bit, but this is what I was talking about. So last month we had almost 22,000 active listings. It's down a little bit. We're at 21,279, but closings went from 4,300 down to 3,500. And what this has done for the gap is we went from a ratio of this past month that was 5.6 to 1. It's hard to write this way. Now this is 6 to 1. So every month, this gap is getting wider and wider. Now you might be wondering, because I had a viewer reach out, really smart way of thinking, what was the gap back in like 2009, 10, and 11, right? Well, our data, I was selling real estate back then, but I don't have that data. Unfortunately, our data only goes back to January 1st of 2012. And if you look at January 1st of 2012, it was roughly an 11 to 1 ratio. So what started as a 1 to 1 ratio just a couple of years ago, this was a little bit more than 1 to 1, but you go a couple months back and it was literally a 1 to 1 ratio, has been opening up from 1 to 1 to 5 to 1. This was 2 videos ago. This was last video. This is now. You see a trend? So next month, I expect that we'll be at 6.5 to 1, potentially 6.7 to 1. And then by the time that we end the year, it could be into the 7s. So are we getting back to the gap that we had back when the market was really struggling during the last housing crash? We're not there, but this gap is certainly opening up. And the more that this opens up, the more opportunities there are for buyers and the less sales there are. So the more panicky sellers get, and there's strategies for both. Buyers can take advantage of them. Sellers have to be smarter about how they sell their houses if they want to extract as much of the value as they can to be able to move on with their lives. All right, let's keep moving forward. So let's take a look at what's happening in terms of activity. Now, this here breaks down showings by price range. And what I've done is I've added 3 years worth of showing activity so you can take a look and kind of see where that's trending. So light blue in this one here is going to be what's happening this past year, or like this past month rather. Black is last year, and obviously gold is 2 years ago. So in most cases, if you take a look year over year, things are up. Things are up quite a bit in some price segments. They're not down anywhere. But compared to 2 years ago, in some cases they are. So that $300,000 to $400,000 range, there were a lot more showings in that price range 2 years ago, and now there are less. Now, why might that be? Is it possible that a property 2 years ago that was $300,000 to $400,000 has graduated from this bucket into this bucket? Yeah, I think so. Now, a lot of properties, if they were on that cusp, you still have 5 to 8% appreciation over 2 years, it would have bumped that price into this next bucket. So let's break it down by county. So this is where I have all of the extra counties. So you can see here that I've added Bartow, I've added Clayton, and I'm sorry, Clayton's been there, but anyways, Hall and Henry are 2 of the other counties. I got to look around this big mic. So nonetheless, you've got the big 4. This is where most of the showings happen in Metro Atlanta. That's Cobb, DeKalb, Fulton, and Gwinnett, right? The 4 biggest counties. Cherokee and Forsyth are the next most busiest ones. And then you got to go out to Hall and Paulding to see the next highest activity. There's not really any major surprises when you take a look at this, except for maybe Fulton. When you look at Fulton, showings are trending downwards, and that might signal that people are just looking at some other counties, because Fulton, unless you're on the south side of Fulton, the inside the perimeter Fulton and north side, especially North Atlanta, has become very expensive, and it's possible people are looking at other areas because it's more affordable. Next, let's take a look at the distribution of year over year active inventory. So the big 4, again, you can see big increases year over year in the number of available listings for sale, right? No surprises. You have less of a jump in some of these outlier counties. You take a look at Bartow, Clayton, Douglas, Fayette, and to an extent like Rockdale. And I would say even Paulding, Henry, and Hall. Like there's these jumps have been a little bit less huge year over year. Roughly the same number of properties have come to market last year as this year and are for sale currently. Cherokee and Forsyth are very similar. So there are more properties for sale this year than there were last year. Next, let's take a look at pending ratio. And this is a really good indicator of how healthy a market is. And if you're a seller, you want this to be as close to 100% as possible. If you're a buyer, you actually want it to be lower because it gives you an idea of how many houses are available and how many go under contract relative to how many are available. So the average for Atlanta right now this year is 14%. So roughly 1 out of 8.5, somewhere thereabouts. So for every 8 properties that are available, 1 of them is now going under contract. So that gives a lot of food for thought to the other 7 to figure out, well, where's our buyer going to come from? So again, it changes strategies in the way that you have to think as a seller to make sure that you don't stay in the market, that you can get your property sold for the most you possibly can and get moved on with your life. So year over year, you can see here where it's down literally across the board. So this time last year, that ratio, there were more properties going under contract compared to the amount of inventory. This year, it's less. Where are some of the biggest opportunities? We'll take a look at Fulton. So Atlanta's 14, but Fulton is right there at around 11%. So that's 1 out of 9. And then Henry County. Henry County happens to be one of the most affordable counties you can buy in, and it's 1 out of 10. So there's a lot of opportunity if you're looking to purchase a starter home or a more affordable home. You definitely get a lot more for your money in a place like Henry County. That's 1 out of 10. That's so low. That's really, really low. It's shockingly low. So places like Cobb, it's stronger. It's still not amazing, but it's 17%. So what is that? 1 out of 6, 1 out of 7, or somewhere around there, right? Same thing. Bartow County is strong. And then one of the other strongest places is Paulding. So Cobb, Bartow, and Paulding, what do they have in common? They're all northwest counties. So it seems to be an area where things are moving relative to the supply a little bit better. And then Gwinnett's above the baseline as well. So is Cherokee. So everything else is under that baseline. Next, median price by county. So this here just gives us an idea of where we've seen prices either go up or down. And Forsyth County continues to have the highest median price. Again, this is, I think I've mentioned it in the last video. If you were to take Fulton and cut it up into north, central, and south, this would be a very different number. North Fulton would outpace this, but how Fulton is calculated and cut up. So 630,000 is the median price in Forsyth. That's an incremental upgrade year over year, but that incremental upgrade is still an increase in price where in some places you're starting to see prices come down. So they were up slightly in Cherokee, slightly, very, very slightly in Cobb. Greater Atlanta was almost a standstill when it comes to that, right? We saw 425. It's been 425 for a while. This here was 424 and change. So next month, if it's 425, that line is going to be perfectly flat. Kind of like how it is here in Paulding. That's probably what it's going to be for Metro Atlanta as a whole. But where we're starting to see prices come down, take a look at Rockdale. That's down. Henry County, down. So not only do these places already have more affordable real estate, but their home prices are starting to trend down as well. Next, let's take a look at months of supply because it's going to tell us, are we in a buyer's market? Because it seems like we're trending that way. So are we? So this yellow zone here is a balanced market. There's no real advantage to a buyer or a seller, but because of where we've been over the last couple of years, and that's a really strong seller's market, a balanced market will feel like a buyer's market to most home sellers because, again, I've mentioned this in multiple videos, but if you saw your friends and family sell in hours, if you bought a house over the last couple of years and you had to stand in line to wait to see that house, you were involved in multiple offers, you overbid the house, you did away with an appraisal contingency. That's the world that you expected, that you got used to. Now it's completely different ballgame when you're selling. So a balanced market where you're on the market for a little while before you sell is going to feel uncomfortable, very uncomfortable. But nonetheless, theoretically speaking, it's not a market that grossly advantages one party versus the next. You'll see some price discounts, you'll see closing cost concessions, repair concessions during the due diligence period, that kind of stuff. It's a little bit more of an equitable market. Now we're starting to see some areas we don't have anything for single family homes and overall market that is in a buyer's market yet, but it's starting to trend there. So we've got some balance. So take a look at Henry. We just got done saying that home prices in Henry are coming down. Well, Henry for the last little while has been in that. So what are these lines? So the blue to dark to black, these are 90-day trends. And then yellow is this time last year. So this time, and you can see here this red line that comes across, the metro as a whole has an average of 4 months of inventory. That's where we are. Compared to where we were last year, it was like 2.7 last year. So that's a big increase. This is a big jump year over year. And now you've got some for places like Henry County, for example. That's a big jump into balanced market territory. I expect that this is going to cross this threshold here and come into buyer's market territory before long. We have other parts of the metro that are trending that way. Take a look at Fayette, also South Side. Take a look here at Rockdale, Southeast Side. I mean, Fulton's almost there, right? That's trending upwards as well. But everywhere seems to be trending that way. Take a look 90 days for Bartow, Northwest, Cherokee, north side of town, Clayton, south. That's above the threshold, but it's not yet a buyer's market, or I'm sorry, a balanced market. One of the strongest markets in terms of months of supply continues to be Cobb County. So Cobb, Cherokee, Gwinnett's doing under the baseline. You know, Forsyth County is almost at the baseline, but not quite close to a balanced market. So markets are shifting. There's no question. Right now, you have more opportunities in places like Fayette, Fulton, certainly Henry, and Rockdale County and Clayton. So if you want to be on that south side of town where you get a little bit more for your money, you definitely have some opportunities to be a little bit more aggressive with the offers that you're making as well. Now that brings us to days on market. So you see how that shifts. It's still a lot of the same areas. Same thing. Yellow is this time last year. The blue to black is the 3-month trend. So moving my little thing out of the way here. Look at that. 70 days on market. That's the average cumulative days on market to find a buyer in Henry County. That's almost 2.5 months. I mean, it's 2 months and 10 days basically. We'll call it 2.5 months. So when you were used to selling in a day previously, now you're on the market for 2.5 months on average. In a place like Henry County, Rockdale's right there. Take a look here at Paulding. That's nearing Fulton. It's not too far away. It's 60 plus days. Douglas County. Take a look at Clayton. Really on the opposite end, and it's still trending up. Look at these are all trending up, whether it's Cobb, whether it's Gwinnett, Forsyth, and year over year, there's some big jumps. This is a big jump in Forsyth County year over year, because that's, I would say, approximately 55 days on market compared to, what is that, like 33 days last year? That's a huge increase year over year in days on market. So in terms of what sellers are actually getting, this is the sales price over the original asking price, and it's down everywhere. So you go back, same thing. Yellow is this time last year. So Forsyth had the highest ratio of sales price over original ask price. They were getting 98.1% of the original ask price. So that was very, very strong. Cobb was very close. Gwinnett, a little bit higher than Cobb. And then you can see that Cherokee wasn't doing too bad. And obviously Paulding. Now, these counties, like the baseline right now, you can see where that is for Metro Atlanta. It's like 96.2%, I think is what that number is, somewhere around there. And look at all the counties now that are underneath that baseline. So in Clayton, for example, that's like 94.3%. You're getting a big deal on a house if you want to live in Clayton County. Not only is it on the market longer, there's more inventory, but sellers are having to negotiate more of their price to get these homes under contract. Is it a question of houses just being overpriced, or there's too many houses and so they're willing to discount when they get into negotiations because they know that if they don't, they're going to be sitting on the market for a while? Like, it could be a couple of things. Fulton County, you're starting to see that come down as well. I mean, you're into the 95% range. DeKalb, 95% range. So only Cobb and Gwinnett really are firmly above that line, but that's probably going to change over the next year. So price cuts. All right. Everyone's getting a discount right now. So the sales price over original ask price, that's for closed properties. These price cuts are based on active properties. And you can see here that most of the properties in Metro Atlanta, almost half of them and more in some counties, have had at least one or more price reductions since they've been in the market. So a full 47% of all active listings have had at least one price cut across the 11 county region. I know I've got 14 counties listed here, but Greater Atlanta is always 11 counties based on our MLS data. So for Metro Atlanta, the average price cut of these listings is 5.2%. You know, you take a look at some of the bigger areas, look at Forsyth, 6.8%. More than half of all the properties there have had a price reduction. So, and then if you take a look at a place like DeKalb, it's even higher than Forsyth in terms of the number of active properties that have had one, but the discounts haven't been as high. Where they've been higher, surprisingly speaking, is Cobb. Look at that, 8.2%. So basically across the board, it's 1 out of 2 properties have had a price reduction. 5% is the average. Some places have been as high as 8.2%. And on average, I mean, it's anything in between, right? It really just depends. Now, when we break this down by price range, there aren't a ton of $100,000 to $200,000 properties, but of those that are there, almost 60% have had price reductions of at least 10.1% on average. That's crazy. So on a $200,000 house, it's $20,000. So you're getting like a $200,000 property for 180, $120,000 property for 98,000, something like that. Again, you're not finding a ton of those, but there are townhomes and condos, and those are factored in here. This is not all based on single family data. So where else are we seeing some interesting price reductions? Is that 5 to 600 range? That's almost 50%. And it's roughly 5% across the board. In some cases, the average is 4.4. Other cases, it goes a little bit higher. Look at the higher you go up in price, the bigger the discounts. So this video doesn't cover $1 million plus. If you're curious what's happening in the luxury market, you're going to want to check out that video that's going to come out in about a week or two. It's $1 million plus only. So this one here is really up to $1 million. Brings us to the type of concessions that sellers are getting. So how many homes are actually getting their price? And are we still seeing bidding wars? Because it doesn't sound like it, but we're still seeing some houses sell for above. So take a look at this. So this is the percentage of listings that closed that sold for less than asking. And it could sometimes be if a property goes on the market for $1 million and it sold for $999, like $1 less, it'll still fall in this category. So it doesn't specify necessarily the amount, but if it's $1 million listing, you saw earlier that it was roughly 8% was the average price cut. Nonetheless, almost 7 out of 10 houses that are on the market that sold for less than asking. You go back 2 years and it was half. So we went from 5 out of 10 to 7 out of 10. So most of these properties, if you look at the properties that are selling at the asking price, this is relatively stable. It's 1 out of 5. It's still a drop over the last couple of years, but that's relatively stable. But look at the ones that are selling for more. So 2 years ago, 3 out of 10 houses still sold for above asking. Now, almost 1 out of 10. Big drop. We're also seeing more sellers paying closing costs. Now, it depends on what part of town. I'm working with a first-time homebuyer couple in the Johns Creek area, and in the price range that we're looking in, multiple offers, price goes up, no concessions whatsoever. But if you were to look at a lot of these other parts that we just covered, here you can see that roughly more than two thirds of all home sellers are paying some type of concession. So this is not agreeing to do repairs. That's a different type of concession that doesn't get inputted into the MLS. We don't know, right? But what we do know is the number of home sellers who paid closing cost concessions. And so here, 68% paid closing cost concessions. That's up from 64% last year. It's a little bit of a jump, but look at where it is over the last 2 years. Like that's a bigger jump. It's a nice trend line here. Now, how much are sellers paying on average? Well, the average right now is $8,500. Take a look at that. Last year was 73. The year before it was 65. So does that mean that this time next year, you're going to be looking at 9,500, almost 10 grand is the average? If this trend continues, it's exactly what I'm saying. So if you're a buyer thinking about doing something in the market, maybe you've been on the sidelines. A video like this is maybe the sign that you've been waiting for, because let's look at the facts. Interest rates are trending down. Home prices are coming down. Sellers are open to paying closing costs again. Now, on one end, maybe the market continues like this and things get even better 6 to 12 months from now. But if interest rates continue to come down and now you have an influx of buyers that come into the market, that's going to put upward pressure on inventories and prices could potentially go up. So right now, there's an opportunity. I think that especially heading into the lull of the season, you have a lot of home sellers who are on the market right now that are probably very worried about what's going to happen over the next couple of months, especially if they need to get moved somewhere and their house has just been sitting. Now, of course, all of this is hyper local, so it really depends on where you're hoping to buy. If you're a seller right now, pay attention. Attention matters more than ever on your property. You want to make sure that you're priced right, that your house looks immaculate, and that you have the most exposure possible, because buyers aren't going to be knocking on your door as frequently as they have in the past unless you're in some of these hottest areas. Now, I covered a lot of information in this video. Maybe you want to go back through and watch it at your own pace. Feel free to grab my slide deck. There's a lot of extra slides this month that are in that report that I didn't have time to feature in this video. That link's in the description and in the first comment. If you're going to watch more videos today, YouTube really thinks you should watch this video next.